What's up everybody, welcome to Money Management channel. My name is Andrei and today it's time to do an update on BNGO stock. First of all, brief summary about this company. Bionano Genomics is a life science instrumentation company which focuses on genome analysis space. The firm engages in the development and marketing of Saphyr system, a platform for ultra-sensitive and ultra-specific structural variation detection that enables researchers and clinicians to accelerate the search for new diagnostics and therapeutic targets and to streamline cytogenetics. And it's a strong company with a strong background, and for now its total market cap is $3.09 billion. And here we have an article on Yahoo Finance. It was published on February the 10th, just a couple of days ago. And it says, why are investors so excited about Bionano? One word, Saphyr. The Saphyr genome mapping system may become the next must-have platform for conducting genomic analysis. And there is no denying the compelling story behind these stocks. Its future success is far from guaranteed. Add in additional concerns such as the recent shareholder dilution, and it's possible that this stock could surprise investors, and not in a good way. They had two rounds of raising capital, one on January the 12th and second one on January the 25th. So they have more than enough money, $101 million and $230 million. They have more than enough money to operate their research. But we have a flip side of this coin. The shareholder dilution that comes with the financing could affect how BNGO stock performs in the future. How? As the amount of outstanding stocks increases, future upside is spread more thinly across shares. So, it's not so good for shareholders, but nevertheless it is good for company and for their research and development. And here is Bionano Genomics institutional shareholders, and this information might be a little bit outdated because of the latest date is the end of 2020. And it says, as you can see here, this table shows the most recently reported institutional ownership activity, but it is not necessarily a complete picture. The US government requires companies to report this information quarterly, but many companies choose to report more frequently. As a result, trades may have been placed which do not appear in this list. So, at the end of 2020, we can see all of the mutual funds and institutional investors are buying. But for now we don't have enough information, and I've tried to find information across this list, and they all published according to US government requirements. That's why it is the most recent information. And here is one more thing on a positive side about this company. It is a Vanguard's stock profile about BNGO, and we can see analyst ratings. 3 analysts recommend to buy, and 1 analyst recommend to hold. And before we dive deep into the technical analysis, please give me a thumbs up and subscribe to my channel. In this case, you won't miss my next video. So, here is the chart itself, and we have this type of movement. We are on a retracement of third wave, and this structure says that we are on wave 4 because we can see clear triangle here, and triangle forms on a 4th wave in general, and this means we are on the 4th wave and we might have one leg up. Let me show you my previous setup that was at the date the least probable. Here it is. Let me switch to our chart. Okay, so here was my setup, and it worked perfectly well. I did it somewhere here. So it was entry price of $10.50 and the target price of around $13.50. We've almost hit this level, and in my previous video that will be in the description below, you might saw this update, and some of you might even took profit from this trade, but some of you, I think, who are strong believer in this company, still hold it. And my previous assumption was that we have something like this ABC retracement, but for now I don't think that it is viable because we can see clear ABCDE. Let me show you ABCDE formation, and it means that we are on a triangle. Usually this triangle, it is a symmetrical triangle, it is with decline in volume, and on its apex usually we break to the upside. It's not 100% guaranteed, but nevertheless it's most probable that we will break to the upside. According to my Elliott wave breakdown, I'm sure that we can go up. On top of that, let me show you indicators. On 2-hour chart, we are bouncing, we are hovering right in the middle of neutral zone on RSI. On a 3-hour chart, we have exactly the same picture, and we can see this triangle as well. So we are hovering on the MACD, we are losing momentum from the both sides, and we can go either way, but according to Elliott wave we might have one leg up, and it is more likely to have one leg up. And here is a 4-hour chart. As you can see, the same pattern. We don't have enough data from the upside, but from the downside we can see clear momentum, and in this case that this momentum is losing its strength more heavily than this momentum. This means we can go to the upside, and this means the price might go up. On our side we're hovering right in the middle as well. On a daily chart we have some room to one leg to the upside. We break this support as I draw on my previous video, and I don't need it for now. But despite we break it to the downside, we don't have price movement to the downside, and this means that it is a hidden bullish divergence that we can go to the upside. The only concern is a weekly chart. So we are extremely overbought. We have more than 97, as you can see, 97 points. And this means it is the worst point to invest in this company. It is only for swing trading. So, and now let me show you my setup. For those of you who hold this position, you can still hold it. And for those of you who want to enter this trade, just remember, do not enter heavily. It is not the best probability of this trade, but nevertheless I will start to buy at this apex, and my stop loss will be slightly below previous low. So let me show you this one. Here's my entry point, and my stop loss will be slightly below this level, previous pivot. You might even go here, but according to basically this formation, you don't need even put your stop loss lower than this point, because if we break down this formation with the conviction of volume, it will indicate that we will go down. And just in case with the false break out from this point, I will put my stop loss slightly below, and it will be about 10%. And let me show you my target. So I took a Fibonacci extension tool, put the beginning of this tool at the wave 3, at the beginning of wave 3. second point at the top of wave 3, and third point at the retracement, what we have for now. And the most probable zone for landing the end of fifth wave is 0.786 from the third wave, so it's 78% of third wave, and that's why it gives us an opportunity of around 45% with risk to reward ratio about 4.4 to 1 and potential loss of 10%. That's it for now. This is the trade. I don't insist to enter this trade, but it's up to you. Do your own due diligence and decide either you want to enter this trade or not. With that being said, please subscribe to my channel and hit the like button. See you next time. Bye.